Now, efforts to cut the UK's deficit have suffered a setback. New figures show that the amount of money that the government is borrowing remains well above target. £600 million had to be borrowed for public sector spending in July. Now, the Treasury has blamed disruption to North Sea oil production. That meant that tax receipts were down, so ministers had to borrow more than was expected. Let's speak to Kevin Butler. Kevin's a consultant economist with Milsted Langdon Chartered Accountants, formerly Birmingham's Bank of England representative, and he's on the line now. Kevin, good morning.
Good morning, Pete.
Now, Kevin, hopefully you can kind of clear some of the muddy waters around this subject because, you know, the economy and economics can get a little bit complicated. Just explain, why is borrowing still so high, then?
Well, it's certainly what surprised economists over the last day is the shortage of tax revenue in a month when tax revenue is normally quite high, because a lot of businesses and individuals have tax bills to pay at the end of July, and the money hasn't come in to the extent that was expected. As you say, the North Sea factor is a kind of one-off thing, but I think it also reflects the fact that businesses are not generating as much profit as was expected. We're back in recession. The Eurozone crisis has hit a lot of businesses hard, and so they're not generating the profits that are kind of pulling in the revenue for the Treasury.
Well, the ministers have come back and said, you know, they think that things are picking up, unemployment's down, businesses say that things are on the up.
You're absolutely right, and that's why it's a question of timing, because tax receipts are always kind of backward-looking. They're reflecting activity often a year before. So when we went back into this really slow period of growth from the middle of last year, what we're seeing now is taxes being paid reflecting the start of that period of slow growth last year. So there are some signs, and there have been some signs over the last couple of quarters actually, of a pickup in activity. Employment is picking up. Certainly private sector employment has been picking up, and the unemployment numbers have been coming down. Although a slight caveat there is that some of the new jobs, private sector jobs that are being created are part-time rather than full-time. But it is, I think, a question of timing, and there is a bit more optimism from some businesses that we talk to. I think the other question, the big question that's out there, is whether the government at this time should be doing a bit more to prime the pump, really, by spending more money on capital investment.
And how much of this do you think is down to the higher welfare bill?
Well, some of it is due. There is certainly an increase. The latest numbers reflect an increase in welfare payments, and that again reflects the sort of pickup in unemployment that we saw through last year, and the numbers this year with an improvement in employment. It's too early, really, for that improvement to be reflected in the public revenue and expenditure figures.
All right, Kevin, good to speak to you. Thank you so much. Kevin Butler, consultant economist with Milsted Langdon Chartered Accountants. Kevin, of course, formerly Birmingham's Bank of England representative.